Welcome to the Four Seasons Podcast, brought to you by B&H Wealth Strategies, serving Northeast Tennessee and Southwest Virginia since 1966. Here, we guide you through the ever-changing seasons of your financial journey, offering insights to help you grow, protect, and enjoy your wealth. Ready to turn your financial dreams into reality? Dare to dream. And now, here's your host, President of B&H Wealth Strategies, Jeff Bingham.
Intelligence is reshaping everything from investing strategies to daily financial decision making, and its role in long-term planning is growing fast. Welcome back, everyone. Skip Monaco / producer back in the studio with the star of the Four Seasons podcast, president of B&H Wealth Strategies, Mr. Jeff Bingham. Jeff, how's it going?
It's going great, Skip. How about yourself?
Doing just fine. And as I mentioned in the tease there, a lot going on in the world today that's affecting financial planning and the financial stability of, locally and, globally. So let's get cranking. Today's question is, does AI play into a long-term financial plan as an investment and or as a tool? Go for it.
Yeah, great question, and something that we talk about with a lot of regularity, if you will, here in the conference room. I'm recording the podcast this morning with my clients, also with my staff, and with Matt, Matt Bingham, who helps with the podcast on this end. He and I have had a number of conversations about it. Um, and so what I would say is that it, without question, as my father used to always say, it's going to play into long-term investing, and then also in helping decision-making processes and designs of various things. So let's kind of break it down and kind of maybe piece by piece talk about it a little bit, I guess. First, from an investment perspective, just where it fits in and how do you put it into portfolio. And that's really pretty generally speaking, that's pretty easy, right? Because again, when you're buying stock market or equity, type of investments, whether it be individual stocks, mutual funds, or exchange traded funds known as ETFs. I mean, you're getting exposure to AI companies through that diversification that we certainly would be putting into portfolios. Just if you own the S&P 500 index in one of those either mutual funds or ETFs that I just talked about right there, you got a great deal of exposure to AI companies from Microsoft to NVIDIA, who's making the chips in the AI. So you're covering it there from an investment perspective. So I think that exposure is taking place. So we're not, at least from our perspective, we're not trying to go out and identify, who's going to be the next high flyer in the AI market and is going to develop the next leg of that and level of that. We're letting our investment, you know, um, committee teams that we work with at Aptus Capital that I've talked a little bit about in here, identify those types of things to help us construct a portfolio based on the criteria that we give them, the risk tolerance of our clients, et cetera, that we do that. So that exposure takes place. I think some notable things along AI as an investment is that it really was exploding from a return standpoint, through Microsoft, NVIDIA, uh, you could be at Amazon, any of these, even Google, all these have these AI places. And we hear about Chat GBT. We've got now you'll hear about Anthropic and all these kind of these names that are out there, these AI companies. And so what we're beginning to see, and this really started probably late last year, certainly rolling into this year, is that there's been an incredible amount of capital poured into AI to develop it, right? And so these companies, in the anticipation of what it's going to do for those companies, is driven their stock prices, you know, almost asymmetrically up. In some instances, they've just gone up incredible amounts. So what you really begun to see is this year has begun to unfold is that kind of those household names, a few of which I just mentioned there a moment ago, is that they really have kind of been punished, and that's not the word that I might I could probably come up with a better word, but punished in their stock price a little bit early part of this year, where they've pulled back from those highs because, again, all the money that's being spent and poured into AI, the market, the investors that are out there that are putting their money into these companies, right? They want to start seeing some results. They need to start seeing the profit, right? The margins need to be there for the profitability of those things. And so, that's still yet to really be seen. There's still more capital being applied to it than there is earnings on top of those kind of things. Now, their earnings are still good, but from a money being spent on it to the earnings that are coming back, it's kind of a show me the money kind of thing from an investor perspective in these companies right now. And I think that's really a good thing to see because what we have begun to see is that we've had a broadening out of the breadth of this market underneath these 4 to 5 to 7 companies that have just pulled this market along for the last 3 or 4 years. The Magnificent Seven, we've talked about the Mag Seven on here a number of times, and those that have been in my office have heard me talk about it as well. And it's really just kind of drugged the market along with it. Now, what we're beginning to see is the Mag Seven has kind of lost a little bit of its shine. Is that the other components of the market, the more, some of those would be more ancillary to the AI thing, but also just good old fashioned, companies that provide goods and services, energy companies, financials, healthcare, all those kind of companies that are also in there that are also and we'll get into this, that are benefiting on their bottom line numbers from AI, helping them to be more productive, more efficient, driving their bottom line. So that's, again, so as it's fallen off of the Mag 7, the creators, the developers, the providers of AI, the users now of AI are beginning to and reap some of the benefit of AI. So that's kind of where we are in an investment perspective. And I think that's a very healthy thing that we're seeing right there, kind of underneath the headlines, right? When you pull back the covers and you look at what you own, just look at the S&P 500 and look, there's 500 companies in there. And, when 7 companies are leading the charge and providing, 40%, 30, 40% of the returns over the last several years, if you look at it, and kind of just driving that, 20, let's say a 20% return a handful of companies is driving, you know, 40% of that, let's say if that's just the number right there on a 20%, that's 8%, of return coming from those. And the others are just kind of, helping a little bit along those lines right there. So what we, again, what we've seen is kind of a leveling out of that. That shows that the market is really getting healthier in a way than it was, which is good to see after years of really solid performance as we move now into this 4th year to see where we're going. I think that bodes very, very well going forward. So, from an what we invest in perspective. So, I'll kind of toss it back over to you to ask the second part of that question and follow up on any of that if you want. If you
Sure. Well, that makes sense. As far as an investment goes, it's definitely a net positive. It sounds like. What about as a tool for actually researching and doing AI-driven research for financial planning? Is it possible that there are risks involved in using AI as a tool for financial planning?
uh, Yeah, I mean, I'm sorry. I gotta kind of unpack that a little bit. Is there risk involved in it? And again, I think there's two components to that question. One is that from an advisory firm like ourselves, a wealth advisory firm like ourselves, we're using AI, now to help us to be more efficient, to be higher in productivity, and it is helping us immensely. And I'll come back and touch on that and kind of dig into that a little bit. I think from an investor's perspective out there, that's the other side of that coin. I think it can also be very beneficial because you can certainly ask a lot of questions and you can drill into those things. Again, I think it's in some ways it's not unlike it was, let's say 30 years ago and probably a little longer than that now. This is kind of the web 2.0, right? The initial internet, when we start back in the early mid '90s when that comes out, and you could search everything, and that kind of grew and developed, and you could Google everything. So it's like Dr. Google or investment advisor Google. You could go out there and find your own information. So for those that are kind of do it yourselfers, if you will, and those that might be thinking, oh, do I want to pay an advisor? Can I do this on my own? That kind of thing. First Web 1.0 kind of began to show that, well, there's a lot of information out here. Maybe I can do this on my own, right? With all the information, and I can do it better than I can with an advisor, after their costs and their fees and all the guidance that they provide and all those kind of things. I get that. I think what most people saw from Web 1.0 is that that wasn't necessarily the case, right? I can get a lot of answers, but am I asking the right questions, and how do I apply it to mine? So I think it breeds a little bit of overconfidence, and then one of the things where you begin to kind of see maybe that overconfidence kind of unravel, if you will, would be during times of distress and stress in the markets, like we're going through right this minute as we talk with the Iranian war that's taking place. And we'll touch on that in another podcast that we're going to record here in a bit to kind of get more involved and kind of unpack that. But that's when, can AI, whether can it be Web 1.0 or Web 2.0, can it answer those questions for you? Can it keep you on track? Can it really dig in and know you like an advisor does and give you, the appropriate information? Maybe you can, maybe it can't. But I think, again, fast forward to where we are with, as I was talking about with AI being Web 2.0, if you will, again, I think it can be an unbelievably great tool for individuals that are out there that aren't advisors to begin to answer some questions, but also probably honestly, it probably makes them think more about what their real questions are and how those questions and what how it relates to their own situation. So again, I think it's a tool. It's not a replacement for advisors at all. I think actually it's a complement. Uh, it's a complementary thing as a client, a prospective client, or even my existing clients can use AI, come up with questions, frame them, come in and ask them with us as we sit down in one-on-ones. So they've got a little more information. They know a little bit more. And so the conversations that we're having on a one-on-one basis, whether it be about, investments that we hold or taxes or retirement plan distributions or when to claim Social Security. I mean, AI, just like any other thing, can give you it can give you some boilerplate, information, like generalized stuff, but it's going to be hard for it to be specific to you on a one-on-one, one size fits one situation. So I think there's that. And then I think from a standpoint of how we're using it here, as a firm, right? And we're growing into it. And it really is quite extraordinary. And like I said, I'm use Matt again. We had a conversation where we used it on a kind of an ad campaign that we were putting out, and I took a document that I'd gotten that we wanted to kind of use and kind of splash, kind of a marketing campaign out to clients on a fixed income investment that is just a really great opportunity. So it was given to us, from a financial institution. We wanted to take that financial institution and take it uh, and put it into, kind of a client friendly kind of situation to say, hey, this is something you really want to raise your hand and ask a question about. So, we're marketing. It's a commercial, if you will, through using, social media platforms, using our email campaigns and whatnot. So I sent that to Matt. Matt worked on it and created a very nice and beautiful campaign to send out to clients. Jake and I took it and put it into Anthropic's technology called Claude, and it took what we had received, it took what Matt worked on, and it took that idea and it just made it into even a more, just a really beautiful piece that was out there. And so that's a collaborative effort with all the parties that gave us, not quite the finished product, but an idea of what a finished advertisement could look like, that we went back and then brushed it up with with human hands on it. So again, But again, it would take us to do what we did right there. We would have to go to, an advertising, agency or some of the places that we've utilized over the years. And it would have cost us, hundreds, if not thousands of dollars to put that idea together and keep those kind of folks on retainer and stuff to kind of do that. And we were able to do it in about, in a half an hour's time. And so, and then we're using it to create templates for our website. It evaluated our website, Claude did, and came back with some incredibly good ideas, some things that we hadn't thought about, or some things that would take us a long time to a good amount of time to kind of write, create, think about, kind of bat it back and forth, and then put it out there and continue to kind of to curate that for our purposes. We were able to let it look at our website and some of the back page stuff that we were still a little late on getting, kind of refining and getting it better. I always use the expression, our website looks great. We look like a movie set. It looks great on surface, but some of the depth and detail, behind that, you kind of walk in and there's really not much to it. Right. So we really kind of began to work on that. And it was able to read our website, took our ideas and, and just put together a great idea around our faith-based driven things. It put our four seasons into it. And now we've got to go back and put the human touch on that because we'll go back and curate it, cull it down and do it. But that would take us forever to do. That's just a couple of ideas. So, I do not believe much to many people's, contrary to a lot of popular belief out there, my opinion that right now is AI is not going to be a job, is not going to disrupt employment. It's not going to create high unemployment that's out there. It is going to change the landscape. There'll be some creative destruction in it. But Matt and I were having a discussion about it, literally about this and what it did to take his work. And he's like, oh, it's going to replace me. I was like, my opinion, no, it's not going to replace you. As a matter of fact, it's going to make us so much better, so much more productive, so much more efficient that it's going to require us to bring in more human capital, right? To bring in people to manage the process. But what we're going to be able to do, as opposed to spending more time behind the scenes, we're going to be able to spend more time servicing our client in front of our clients and making their Four Seasons experience that much better because we don't have to always be, behind the scenes working on, the things that they see that we put out to them. And that takes a lot of time. Like I said, AI is going to make that much, much more efficient. And I think that's going to be true. And I think there are going to be a lot of companies, and I'll wind this down here. I think there's going to be a lot of companies, whether it be small businesses and large corporations, that are going to use AI and they're going to use it to get rid of maybe a lot of employees, to cut their staff. And you're already seeing some of that. But I think what's going to happen as this thing really goes forward is that I think those companies are going to be sorry that that's what they did because, again, what they're not seeing is the complement that it's going to be. I think it has the opportunity to increase employment or at least keep it where it is. There'll be different jobs and all those kind of things, but I think it'll also drive wages and production up. And I think that begins to help with the affordability crisis that's out there. So in the short term, I'm very excited about what AI can do. I think it can help the economy much more than people are seeing, both in just the margins and the profitability, but also the cost and the affordability downstream to the consumer, the American citizen, but also to the American worker, which I think it will drive their wages up. And as affordability and productivity goes up, costs will go down. And so I think when you complement those things in the short run, I would be very excited about it. I think you can be I'm still pretty frightened about the long term, aspects of it because it is incredibly intuitive. And that's frightening into itself, but that's for another day, to kind of have that conversation. But again, um, fascinating what it can do, learning about it for someone like myself that has visual issues and challenges. What it has been able to help me do and navigate the world without sight in a very heavy numbers and narrative world. I need to read a lot of things. I need to consume a lot of information to be valuable to my clients, right? And it's really helping me do that in ways that are almost immeasurable.
Awesome. So efficiency enhancement, not replacement.
I think
dig it.
so. I mean, I really do believe that to be the case. I've seen reports to the contrary. There's a report out there, and I know we're going long on this, but called the Centuri report. Um, that talks about, unemployment being at 10.5% and by the year 2030. And I think that's absolutely overblown. We'll actually send out a blog that my buddy at Apis Capital, David Wagner, wrote a response to it after reading it. I mean, they're trying to predict unemployment and employment, 4 years at downstream from now, when we can't predict employment numbers from 1 month to the next, and we revise going backwards all the time. I think it's a nonsense report, but it's got a lot of traction amongst a lot of folks that are out there. So, that's where a lot of this, kind of fear and hand wringing takes place out there in the headline, the noise versus the news. I think the news is what I tried to talk about a moment ago. I think the noise is it's going to be so disruptive. People are going to lose their jobs, and there's no question that's going to happen. But what people don't see behind that is that the jobs are going to be created. Technology has been disrupting, disrupting economic cycles and for centuries, right? Since the beginning of time, technology is always moving forward. This is just the technology of the 21st century. So I don't think it's different, but it's not, history. If it doesn't repeat, it rhymes. And what it generally proves is that it makes us better, not worse, and doesn't get rid of all the jobs. I mean, go back 30 years ago, so, we're still at pretty much full employment right now. So there
There
you
we
go.
go. Well, Jeff, thanks for breaking that down. We'll end on a positive note. It's going to make us better.
It's going to make us better.
That's right. All right, Jeff, thanks so much. We'll revisit this again. It's a deep subject.
All right. Keep faith, man. God bless America.
All right. Absolutely, brother. Have a great rest of the day.
Thanks.
Thanks for tuning into the Four Seasons podcast, brought to you by B&H Wealth Strategies, where your financial success is our priority. Schedule your free 20-minute consultation today by calling 423-247-1152 or by visiting bhretire.com. Take the first step toward making your financial dreams come true. Until next time, remember, every season is the right season to plan for your future. Securities and registered investment advisory services offered through Silver Oak Securities, Inc., member FINRA SIPC. B&H Wealth Strategies and Silver Oak Securities, Inc. are not affiliated.